Hello and welcome back. We're going to talk about Tilray brands. This is a stock that has been in an uptrend in the past couple of days or so. And today, actually yesterday, it was up 22%, and today is up around 17 as I checked the pre-market earlier. So we'll see what's going to happen when the markets open. But you will see here in the social trends tab, which is very useful, that there is a massive increase in activity in posts and comments and stock tweets and likes and impressions. And the same thing with impressions on Twitter and all that jazz. Now, posts and comments can be a little bit down because Twitter is about the actual time that something happens. But stock tweets is around the whole sentiment where people actually are discussing the stocks all the time. So you can see there is a massive increase in activity. And based on the stock news tab, it looks like cannabis stocks are actually up because of potential legalization, getting a floor vote in Congress, and it potentially showcases the way and the path for these kinds of companies to become even more profitable. And so we're going to take a look at the company and analyze it a little bit, see if it fits a portfolio. And what we can notice here is that the 1 year high of the company has been $24 and it's currently at 6.97, almost 7. And so you can understand that cannabis stocks were the thing for a little while. But this whole legalization thing and potential regulations and all that jazz can really bring down the value of a stock of that sort, of a company of that sort. And when things get 100% legalized, then that's a completely different story. But before that happens, you can have these massive uptrends and downtrends based on the news. And there's something to notice here. The 5-year revenue growth of the company has been increasing, but the 5-year net income, the profit of the company, has been massively decreasing. And you will see that the company is losing money on increasing growth. So that's not a pretty picture to see, of course. And the 5-year free cash flow growth also going down, although it's a little bit better than what it used to be. You will see here that the company was actually losing more. Now the P ratio is negative because the company is losing money again, and it has been negative for a while, although a little bit better. And the price to free cash flow ratio also negative because the company is losing free cash flow. And another bad thing, the outstanding shares of the company keep increasing from 200 million here to 450. The company tried to take advantage of the increasing prices starting in 2020. They started printing shares and selling shares to investors at about 25, I'm assuming that time. And they increased their outstanding shares here, massively diluting them. So that's not a great picture to see. And also the returns on equity and all that jazz are not good here. Of course, the company is not making money. And, not much debt is at least a relatively good thing. Now, I want to take a little bit of a look at the stock evaluation tool and see whether we can actually deduce what would be an interesting price to pay for the company. And you will see here that the revenue growth has been all over the place, and the last year was 31%. You will see all the years here. We'll have to go with something relatively high because I believe this company could actually continue growing nicely. And we're gonna go with 2022 and 24, which is pretty high revenue growth. But based on what the company has been doing, I think they can achieve that. The problem comes when we're taking a look at the net income margin and the free cash flow margin here. These are the big problems. Because take a look at the net income margin here. It's negative in the last 3 years, and it used to be positive. And so here we have negative projection, potentially negative projections, because the company keeps losing money. Now, if I enter negative margins, we're gonna get very low values, close to zero, or even negative values because the company is losing money. So I will go with a more optimistic scenario and use this kind of values here and still go relatively low, go 5, 10, and 15, and assume that the company will turn to profitability again and start making a little bit of income. The free cash flow is also the same story. You'll see here that the company has in the minus. However, they're actually making more free cash flow in the last year. Now, you may be asking how they're making free cash flow when their net income is negative, and that's a great thing to ask. And we can actually, let's actually do that later. We can actually take a look at the free cash flow, at the cash flow statement to see that. But for now, let's just use a similar value here. Let's go like 10, 15, and 20. And an annual return of 13 is what I typically want to get. And you will see here, if I calculate, that we're getting a very, very low value, which doesn't really adjust to what the current price of the company is much more expensive that we'd like to get it at, based again on these projections, which are also fairly confident here for what the company has been doing, because it's like for the next 5 years. Now, if we take a look at the cash flow statement here, let's give it a little bit of a look here and see what is happening in the net cash provided by operating activities. So that keeps being in the negative, and there is a little bit of a depreciation and amortization here that is increasing this value here, and some other non-cash items that are potentially one-time items here that is also increasing the net cash flow, the net cash provided by operating activities. Yet it is still negative, and so you will see here that the free cash flow of the company keeps being negative. Now you notice this increase here because it increased from the last year, so it is better than what it used to be, but it's still negative. And if we also take a look at the income statement of the company, you will see here that their net income is also decreasing. So, and it's decreasing massively here. This is a massive increase from making $1 billion to actually losing 300 million here. So that's a huge loss and a huge downturn for the company that you'd have to bear with if you want to be buying the company. And I'm not sure how much I'd be willing to pay. Probably I wouldn't be willing to pay myself. But at the current price, even at $6, it feels expensive to me. And again, you want to be buying a company and an investment in order to be making money, and not just because it's going up for a day or two. That doesn't mean anything. And if we take a look at the balance sheet, you will see here that the total liabilities of the company, let me actually find it here, the total liabilities is sitting on 1.56 billion, while the total assets are sitting at 6 billion, making it a company of almost $4.5 billion in total equity. Now you have to bear in mind that a lot of this equity comes from the stock that the company sold, right? This is important to understand. The company has been massively diluting its investors, and so they are getting a lot of money from actual investors willing to buy the company's stock, and you can actually see that here in let me find it here in these activities, and it's a common stock issued, and you will see here in the financing activities that the company has been issuing more and more shares again. And so they have been making a lot of money just by selling stock to investors. Even though it wasn't a very expensive stock, they actually doubled their outstanding shares, as we examined earlier. And remember, when we took a look at the stock analysis, they actually doubled their outstanding shares here, which were 200 million. So they actually issued 200 more million shares over here. Okay, so what I would be doing with this company, I think it's very, very expensive for what it is, and it's not making money really, it's losing tons of money. So I think there is a lot of risk, and I would definitely avoid. So regardless of what the news is, so about the company, I don't really care, because the financials of the company do not really align with the price, the stock price, and I don't think I will be making money if I buy this investment today, at least at its current state. So yeah, that's what I wanted to talk about in terms of Tilray. Hope you enjoyed the video. Please leave a like if you did, and subscribe if you're not a subscriber, and I'll see you in the next video. Bye bye.